learn this one simple strategy that pro traders actually use. And this is a fair value gap strategy I'm going to show you today. So now, if you're new here, please subscribe down there, like this video and share it to friends so that they can also benefit. Okay, so now let's dive into the strategy. So now, fair value gap, okay, is a Philly candle pattern where a large momentum candle wicks do not flare overlap with the surrounding candles, right? Now, for example, guys, we are here. I want to show you what a fair value gap is, okay? This one you see here, okay? This one, it is a large momentum candle, right? For example, we have this candle right here, this one, and we have this candle right here, this one, okay? So now these are the surrounding candles we have. You mark the close of this surrounding candle down here, okay? You mark the close of this surrounding candle down here. You mark its wick, okay? And also you mark the open or the close of this candle right here, okay? Now this was a bearish candle. That means this was the open of this bearish candle, okay? This was the open of this bearish candle. So you also mark it right here, okay? The other one was a bullish candle. That means this one was the open. So now you mark the open of this candle, okay? The wick, the candle wick and the wick, okay? That means you mark the open of this bearish candle. Then in between there, it is what we call a fair value gap. In between here, this is a fair value gap. Always the market will come back and retest this fair value gap sometimes, okay? So now let's get to another example. Let me show you another example of a fair value gap, right? So now this is another one, guys, okay? When you look at this candle, this is a bullish candle, okay? And it is a large momentum candle, okay? Then after identifying this large momentum candle, you come at the surrounding candles, okay? We have this one, this bullish candle and this bearish candle, okay? So now you mark the open. Remember, this is a bullish candle. That means this was the open of this bullish candle, okay? And you mark the open of this bearish candle, okay? So now after marking that, in between here, it is a fair value gap, okay? In between here, it is a fair value gap. That's why we call it a free candle pattern, okay? That's why we call it a free candle pattern. So in between there, it is a fair value gap, okay? So now when we go to our bearish market, right? Let me show you a bearish fair value gap, right? So now we are here, okay? This one right here, it is a large momentum candle, okay? This is a large momentum candle, right? So now you come the surrounding candle. This is a surrounding candle and this one is a surrounding candle, okay? So now you mark now, for example, okay, this was a bearish candle. That means you mark the close. Remember, we are in a bearish market. You mark the close of this candle, and you mark the what? This one, it was also a bearish candle. Okay, it started from here up to here. It was a bullish one. So also you mark the close of this candle, right? So now in between here, it is what we call a fair value gap. So now, hope with those three examples, now you understand what a fair value gap really is, okay? So now let's see examples. How do we apply this fair value gap in our strategy? How do you apply and how do you trade these fair value gaps, okay? So now this is how we do it, right? This is a first bearish example we are going to look at, guys. Now when you come here, when you see this, right? Can you see this? This was a low being broken right here, and this was a low being broken right here, okay? Means all it was a bearish market, and this was a low being broken here, okay? Can you see that? And this was a low being broken here. Means we are in a bearish market, right? So now let's come to this first example, right? So after this low being broken right here, as you can see, right? So now the market comes back to our fair value gap. This is it, right? This was a large momentum candle right here. These were the surrounding candles, right? So that means we are going to mark Okay, because this was a bearish candle, that means you're going to mark this that open, right, of that candle and the open of this downer candle. So now can you see that fair value gap we have marked? That means the market will always come back to that fair value gap and retest it right after adding it with the market structure, right? Can you see that when the market came back here, right here, okay, when the market came back right here, can you see how it reacted on that fair value gap, right? It reacted very, very perfect, right? It reacted very, very perfect. That means people really trade from those fair value gap. Okay, so now when you see another example right here, okay, this was another example we can look at, right? Here's another bearish example. There was a break of market structure right here, as you can see it. There's a break of market structure right there. Okay, so now after that, we go here. This was a large momentum candle right here. This was a large momentum candle right here. So now we look at the surrounding candles. There's this and this candle. You will always have to consider three candles, right? So now we mark, this was a bearish candle. That means the open of that candle and the open of this candle. So now that is a fair value gap. Can you see when the market came back right here? Can you see the reaction came back to our fair value gap? Okay, it made a very, 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 very nice reaction when it came to our fair value gap, guys. Okay, we always put our stop loss above this fair value gap, right? And the TP to the low right here. Okay, so now let's see a bullish example right here, guys. Okay, let's see a bullish example. And I told you we add market structure with fair value gaps to trade them very well. Okay, so now this was a break of market structure to the upside. That means we are bullish. After breaking that, right, the market left here a fair value gap because now this was a very large bullish candle. This was a momentum candle. We look at the side candles, this one and this one. Okay, so now when you look at those, we mark this was a bullish candle. We mark this open. Okay, we mark this open of the candle and we mark the open of the other candle right here. Okay, hope you see them. Okay, that one and that one, then we move it. Okay, can you see that when the market, and some favorite gap won't be retested, but sometimes always the market will come back and retest in our favorite gap. Can you see how it reacted right here when the market came back to your favorite gap? Can you see how it reacted? Okay, so now let's see another example, guys, right? So always you have to look for the working fair value gaps, guys. Okay, so now this one, it is right here. This was a break of market structure right here. Okay, then after that we said yes, let's look for a fair value gap. This was a momentum candle, a bullish one. Okay, these were the side candles. That means we come here and we mark the open of this candle and the open of this candle right here. Then we move this fair value gap right here. Okay, this is another example right here. There was a break of market structure right here, and when you consider that, okay, we had very, very bearish candle right here. This was a bearish candle. We have these side candles, right? So now we really come here, we mark the close of that and we mark the open of this, right? Can you see when the market came to this fair value gap? Can you see the reaction it made right there? Okay, so that is the power of a fair value gap strategy that you can implement in your trades so that you become profitable in the long run when you add it with a good risk management skill, okay, and psychology. You can really get winning trades, guys, and it works on all time frames. Okay, so now let's stop there for today. Thank you guys for watching. Hope this video has helped you. We meet in the next video. This is Jimmy. Stay safe and goodbye.